Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from CNBC TV18 Prime Ionic Wealth Studio. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. As always, before we head to our guest, here's a quick look at the action that unfolded in the global markets. Stocks on Wall Street closed Wednesday's trading session slightly higher on the back of the Federal Reserve's decision to cut interest rates by 25 basis points. The Dow gained nearly 500 points, while the S&P 500 added nearly 50 points. The tech-heavy index Nasdaq surged up by nearly 80 points as well. Meanwhile, the markets in Asia-Pacific are trading mixed, giving up early gains that we saw the day start with after the Federal Reserve delivered its third interest rate cut in this year. Back home, the Nifty has climbed to the day's high, inching closer to those 25,900 levels. Take a look at the crude oil prices then, and they have paired the previous session's gains as investors weighed prospects of supply disruptions against a generally bearish crude outlook for 2026. The U.S. has interception of a sanctioned tanker near Venezuela, prompting a pullback on shipments from the South American producer. And it also highlights fears of escalating tensions. On the money market front, the Indian rupee has slid back yet again to near its record low levels, even as prospects of a trade deal between India and US are as of now awaited. But it is the precious metals that continue to shine, and silver has hit an all-time highs at $62.50 an ounce, with the key trigger being the Federal Reserve's interest rate cut decision that was widely in line with expectations. In India, the domestic prices are set to cross 2 lakh rupees per kg, tracking the gains in the international benchmarks, and continued strength also in the industrial demand therein. Take a look at the gold prices, and they are holding above those $4,200 an ounce mark as well. Joining us then on the show is Juerg Kiener. He is Managing Director and CIO, Swiss Asia Capital Singapore. Juerg, hi, thank you so much for joining in. And I want to start with silver first, because that clearly seems to be making headlines right now, outperforming not just gold, but various other commodities and asset classes in the being. How are you looking at silver at 62.5, almost 115% higher in this year till time?
It's certainly been one of the best performing assets this year, but woken up actually really late on the year. So it's been sleepy for a very long time. And don't forget, we just taken basically its 2011 high up of $50 about a month ago. So it's still a very young bull market, and it's driven basically by supply constraints.
Juerg, what is your sense? Would you say the silver rally is done, or is this just the beginning?
I think your $60, which we've taken out, has now become your new support. So I think we might be consolidating here a little bit. And I'm looking at significantly higher prices going into 2026.
Are you looking at much highs from here? Because various global banks and brokerages seem to be talking about 65 and 75 and a possibility of $100 an ounce in the next 2 or 3 years. What is your own sense?
Look, I don't know how high the price is going to go. It's a tiny market. So we have an incredible big number of outstanding derivatives, which need to cover in an environment like that. It's becoming costly to be short. And short squeezes can always go much higher than what people think. So moving into the periods of probably 68 in the short term is probably not too far away. And then for next year, we'll see how high we're going to go, but probably significantly higher.
It's been a long time that we have seen any meaningful correction in silver. The rally started in October 2023, and it has been a progression of newer, higher highs. Do you see any chance at all of a profit-taking or correction? So when you have to put a range out for silver and not exactly targets, how do you look at silver then?
Look, there are some people who believe we might go back down to 50, basically the old breakout level. I don't think we're going to go back down that level anymore, because the outstanding shorts which need covering are just too big. So if you do that, it might be, a glitch in the system, basically, but not really by demand supply or by covering delivery structures, which are going to be squared, which we tried already when the exchange closed in United Exchange, and they closed and squared a few books, and despite that, the market continues to go up, and this is a typical sign of a very fundamentally driven bull market. So 60 is probably the new support.
All right. Juerg, how would you read the latest reports on how China perhaps is going to restrict exports starting 1st Jan 2026? Not just silver, but various other metals as well. And this is as they prioritize their own consumption, also safeguarding perhaps critical minerals, etc. How would you look at that impact going forward?
So if you look at statistics and you look at AI, which is in everybody's people's mind, then you actually realize that AI might require a lot of silver, probably about 3 times as much silver as we used to have in other electric application. So that's about 350, 400 million ounces of silver, which are going to be taken up over the next 3 or 4 years, more than what we have today. That's basically about half the yearly production. And that means anybody who wants to be in that space and has visions on how to compete will have to build inventory. And that makes every short in the market actually trying to cover. So the setbacks will be very, very short as people are building up inventories to be prepared actually for the requirements for military and AI applications.
Juerg, every market has to, at some point in time, consolidate, stabilize, correct even. When it comes to silver, almost all fundamentals still point to a very volatile and higher prices from here. We hear of short squeezes, as you just talked about, and then a very, very strong industrial demand.
Yeah.
How much longer do you see this rally continue? 25 we've seen. Is it going to go on in 26 and 27? What is your longer term view on this?
Look, I don't know. I don't know if you go into 27, 28 or 2030 in this market. It depends how quickly it's going to run. But look at the old silver rallies. I mean, we had a rally which went from 350 to 50 in 2.5, 3 years, basically, twice in the last 40 years. So that's like 8, 10-fold, 12-fold your money. And right now, we basically just about came out of the old resistance level, and people think it's already overbought. It's overbought by moving averages, but not by the fact that the market is tiny, and the bull market in tiny markets are always explosive. So there's a long way to go. I don't know how big the corrections will be in between, but I think it will have to go significantly higher to have an impact for people which have inventories to let go.
Yeah, the other point about silver also is about investment, family houses, institutions, speculative money. All of that seems to be coming in silver. I get your point. We are still below, record levels, whether in ETFs or physical buying for that sense. But a lot has moved in silver, would you say?
No, not really. I think I hear a lot of people talk about it, but if I really look at the volumes as such, not really. And we start seeing that people are offering significantly higher prices to cover the shorts. And I don't see that we covered the shorts yet. So I think there's a long way to go in order to get a sharper, deeper correction, which is lasting thereafter a bit longer. So we're going to move quite a bit.
All right, that's a very, very bullish Juerg Kiener on silver. But what's your sense also on gold? Because all-time highs here and maybe 45 times in this year is when we made newer highs. 60% plus kind of moves here as well. Is gold just consolidating? And what is your sense on this one too?
Look, gold has been the darling until about 2 months ago. And the last 2 months has been silver. So gold is always the first mover, followed by silver and then the palladium platinum group. And then we start moving then on the end into copper, the base metals. And once, the last big commodity moves are coming into energy and coal and bulks, then probably we run into the bull market. So until we start seeing that, we have only short-term consolidation, sideways moves, not big corrections, and the trend which could be going up until we start seeing the heavy, big bulks basically peaking.
Yeah, would you have a target or a range for gold in 2026?
Look, there's only 12 months. It's really relatively short considering we moved already so much this last few years. But let's look at if you want to cover M0 in the United States, we need about $9,000. And will we do that in 12 months or 3 years? I don't know. But I'm looking at basically about these numbers to be achieved before we're settling into an environment where we have stability.
Well, that's about gold and silver, Juerg, but we have to go for a very, very short break. When we come back, we want to ask Juerg Kiener about the energy markets and, of course, dollar index, because that has seen an 8% decline in this year. How would it be next year, and how would that impact commodities after this very short break?